in the pink of its health. Businesses which are reasonably growing slowly and consolidating. And hopefully at that point in time, valuations are in our favor. We need to compound earnings, and valuations have also to step up. So you get higher earnings plus you get higher valuations, and your outcome is a compounding of capital.
A very good morning to you. You're watching Daybreak on Bloomberg Quint Live with me, Alex Matthew. Let's start with the headlines. Asian markets take cues from their US counterparts and open higher. India makes it to the top 100 countries in the ease of doing business, moves up 30 places from last year. A one-time loss of 343 crore dents Bharti Airtel's bottom line in the second quarter. Hero MotoCorp and Tech Mahindra are the two big earnings of the day. And the IPO of the country's largest general insurer, New India Assurance, opens for subscription today. Let's turn to the US markets now, and the Nasdaq reached its all-time high in Tuesday's trade. The rally was aided by technology stocks like Apple and Intel. Bloomberg's Abigail Doolittle has the full report.
Stocks finished higher in Tuesday's Wall Street session. The Nasdaq, the tech-heavy Nasdaq, in fact, finishing higher by more than 0.4%, putting in yet another all-time high. The Dow and the S&P 500, however, finished just fractionally higher. Now, behind the big gains for the Nasdaq, not surprisingly, lots of big tech winners: Apple, Intel, along with Micron. Bigger overweighting or weighting to those stocks are in the Nasdaq. Apple up for a fourth day in a row, up more than 1% on the session. Continued positive chatter around the iPhone 10 pre-orders. Intel trading higher on a report that Apple is unlikely to use Qualcomm chips in its iPhones and its iPads in 2018 and beyond, and instead perhaps use Intel chips. So that stock up about 2.5%. And Micron up more than 6% on Samsung's positive comments around the memory market. Now, one tech loser, however, Qualcomm, on that same report that Apple may no longer use its chips in the iPhone and iPads. Those shares down more than 6%. And this is part of an ongoing legal dispute between these two companies, which will certainly be interesting to see how it plays out. Now, another laggard on the day, in fact, plunging, Under Armour, shares of the athletic wear company. That stock down 23%, its worst day since the beginning of the year after the company missed sales estimates. It was also the first decline in sales growth ever as a publicly traded company, and they slashed the forecast profits by 50%. So investors really not liking that at all, and the stock now down more than 50% on the year. Overall, though, relative to Tuesday's Wall Street session, there was a bit of a risk-on tone, considering that, again, we did have small gains for the major averages, plus Haven bonds sold off just slightly. In New York, Abigail Doolittle, Bloomberg News.
And the Asian markets seem to be taking cues from the US market. They're trading higher in early trade, and there'll be more cues coming in over the course of the day, of course. As of now, the Nikkei, as you can see, is trading as much as 1%, more than 1.2% nearly higher. The Fed decision on rates will be announced later today, so a lot of investors will watch out for that. It's probably expected to maintain its status quo, however. A lot of the data being released across the Asia-Pacific region as well. The headline number there is the October edition of the Caixin China Purchasing Managers Index. It's forecast to hold steady at 51. In India, the Nikkei Manufacturing PMI will be released at 10:30 a.m. Now, Darshan Mehta and Agam Vakil are here now to set us up for the day's trade and also to tell us what's happened in the futures and options space. Darshan, morning. First to you. What's on your list today?
Good morning, Alex. It seems that the day will start well because the Japanese markets are doing well, and the SGX 50 is indicating a positive outlook. So let's say the last time I checked it was up 25 points. Yes, the SGX Nifty back about the 10,400 mark. So a strong start is expected as far as our markets are concerned. How did some of the ADRs pan out in trade? The IT and the banks did well. So Wipro ended up almost 2.3% higher. ICICI and HDFC, both of them gained. So HDFC Bank was up almost 2%. ICICI and Infosys gained more than 1%. So the tech as well as banking stocks gained on the European markets, on the American markets, sorry. Now, as far as crude is concerned, after 6 days of gain, crude is trading muted in today's trade, but nevertheless, still the WTI trades about above 50, nears 55, and Brent is trading above the $61 barrel per market trade. Overall, some of the metals did extremely well on the LME. Nickel surged 5.3% on the LME. Zinc was up close to 2%. The other base metals pretty much, slightly weak. So aluminium, copper, and tin ended lower on the LME. Now, as far as the Asian markets is concerned, the start for copper is good. So COMEX copper is up almost close to 0.5%. Most of the other base metals are starting muted in China, but steel and rubber have started on a positive note in China. Now let's take a look at how gold is panning out, and for the second straight session, gold is trading weak currently. Fund flows, what we're seeing is the fact that FIs sold in almost 530 crores in the cash market. DIIs were net buyers to the tune of 596 crores. On a month-to-date basis, if you look at it, FIs bought in almost 2,000 crores. But look at the DII figure, and that is astonishing. 10,000 crores finally bought in the month of October. So huge DII buying is happening as far as our markets are concerned. Now, the broad trade setup, if you're looking at it, all sectors ended with gains in the month of October. So no doubt Nifty ended down, but for the month of October, PSU Bank Index gained almost 25%. This was the star of performance. In one day only it had gained. Nifty Energy has gained almost 14% this month. Some of the other indices that we have to talk about, the small cap has gained almost 13%, so outperformed the benchmark Nifty. And finally, Nifty Realty has gained almost 12% in the month of October. So it's been a good month as far as all the sectors are concerned in October. Now, what contributed to the Nifty? Axis Bank almost 18 points to the Nifty alone because of the news of Bain Capital buying. Today also one of the media reports indicate that instead of 5%, there will be a 10% stake in Axis Bank that will be taken. So Axis again will be in focus. ONGC, HCL Tech and Bharti Infratel will also ended positively. What didn't do well was Infosys, SBI and Vedanta. So a lot of earnings came out after market hours. And Agam, what's the FNO situation like? In any FNO views on the stocks that came out with numbers after market?
Sure, Darshan, a lot of activity, but let's start off with the Nifty. As you can see, as Darshan was pointing out, we've seen the Nifty move down by as much as 35 points, but it has held on to the 10,300, which is extremely crucial. And along with that, we've seen about 1% addition towards open interest. This, of course, is not necessarily towards fresh shorts, despite the fact that the index itself has moved down by as much as 0.3%. But when it comes to Nifty Bank, again, unwinding has resumed. As you can see, a decline of as much as nearly 2% in open interest. Moving on, as far as the India Volatility Index is concerned, we're looking at another 2.5%, 3% gains there, now firmly above the mark of 12, and which also indicates that there is a little more anticipation in terms of expected volatility as we move in. But that said, in terms of the Nifty put call ratio, that has now moved slightly up to around 1.45 from 1.42. But in terms of the changes in open interest when it comes to the Nifty and options, we're looking at most activity in 10,200, where there are more puts being written, which means that traders for now are betting against Nifty going below that mark. And on the other hand, continued unwinding in the 10,700 call. But what is it when it comes to stocks that we are keeping an eye on? Do remember, Indiabulls real estate is now out of the ban, so we will expect a lot of activity once again. But I'm also tracking a couple of stocks in terms of fresh longs. NIT Tech, I think we have an issue with the numbers, but it has seen fresh longs building in. And Bharat Electronics similarly has also seen an increase of open interest towards fresh longs. So plenty of stocks in the broader market which are doing well, Alex.
Thanks for that, Agam. And let's take a quick check on the rupee in the bond market now. Saloni Dhanuka has all the details. Saloni?
Well, the rupee consolidated strong recovery for the second straight day, and it moved higher by 10 paise to end at a fresh 2-week high of 64.75 levels against the US dollar. Now, subdued dollar overseas along with abundant capital inflows into domestic markets largely supported the rupee. The upbeat trend was also supported by unwinding of long dollar positions ahead of the FOMC rate decision tonight, so it will remain a key watch for overall global currency market. Elsewhere, sterling rose sharply ahead of Bank of England's policy meeting tomorrow, where the central bank is widely expected to raise interest rates for the first time since 2007. That's almost a decade. So coming back home, dollar rupee is trading at 64.68 levels against the US dollar in the non-deliverable forward market, which indicates a marginal stronger opening for the Indian rupee in today's in today's trade. Moving to bond market, the 10-year benchmark yield ended 2 basis points lower at 6.86%. And lastly, global funds increased their rupee debt holdings for the 6th consecutive session yesterday. They infused close to 1,600 crore rupees into Indian debt market, according to NSDL data.
Thanks for that, Saloni. Now, some important news coming in with regard to economic data. The rush of good news, it seems, continues on that front. India's fiscal deficit narrowed marginally to 91.3% of the budgetary target for fiscal 2017-18. The core sector has also strengthened, with growth hitting a 6-month high. What are the implications of those two data points? Ira Dugal sums it up in this report.
Some positive economic data coming out at the end of October. The two data points that come in usually, that's the core sector data and the fiscal data, actually both giving you a slightly better sense of economic trends. I'll start with the core sector data, which I think is a bit more significant. You had core sector output growing by 5.2%. That's a strong number. If you compare where we were back in June when core sector was growing at 1%, from there's been steady improvement. In July, we were growing at 2.6%, in August 4.4%, and now September growth has come in at 5.2%. Given that core sector is a large component of the industrial production numbers, you will probably see a healthy industrial production number for the second month running as well. Just brief mention of the components of core sector to tell you what segments are doing well. Coal has done well. You've seen 10% growth in coal output. Natural gas output was up 6.3%. Steel was up 3.7%. And electricity actually saw a little bit of pairing of growth rates, but that grew at 5.2% as well. So the core sector data is certainly telling you that there is some improvement on the industrial side. To what extent and what level it normalizes at, you'd still want to see a few more months of numbers before you make a judgment on that. The second data point is the fiscal numbers. Remember, there have been worries about the government's finances because they had taken out a large part of their budgeted fiscal deficit in the April to August period alone. The number for September is actually a little bit healthier. So in the April to September period, they have taken out 91% of their budgeted fiscal deficit. That's still higher than what it was last year, which is about 84%, but it's lower than the 96% that you had gotten to up until August. Just to tell you how that actually math changes, as you go along in the year, your revenue numbers start to pick up, and if you front-loaded expenditure over the course of the year, you start to balance out a little bit and hopefully meet your fiscal deficit goals for the current year. Just a brief mention of the fact that on the capital expenditure side, we are now at about 47.3% of the budgeted expenditure being used up. That's actually a little bit lower than what it was last year, which was 54.7%. But on the revenue expenditure side, you're spending a little bit quicker. So revenue expenditure is at about 54.6% of the budgeted amount compared to about 51% last year. But if you put those two numbers together, they're certainly healthier than what they were last month.
So positive cues coming in there. But it's a big win for the Modi government. India has moved up 30 places and has made it to the top 100 on the World Bank's Ease of Doing Business rankings. India was also among the top 10 economies that improved the most in areas of doing business, according to the World Bank. Now, this system was started, the ranking system was started in 2014. So it's not been around for a very long time. But here's what Annette Dixon, who is the Vice President, South Asia region at World Bank, told Bloomberg Quint after the report was released.
Well, India has improved its performance across the board in doing business. We measure 10 indicators, and India has actually improved in 9 of these. So things like the time taken to start a business, the ease of getting construction permits, the development of the new insolvency and bankruptcy code. These are all things which are measured and which are picked up. One thing that's important is that the things that we measure are things that we can compare across countries. So it's a standardized survey, and it's measured at the firm level. So it doesn't just pick up changes to legal codes, but also the implementation of the regulations and the laws at the local level for small and medium large firms.
And Finance Minister Arun Jaitley believes India's structural reforms have started paying dividends.
इस साल कुछ विशेष पहलू हैं, उन्होंने कुछ देशों के नाम लिए हैं जहां स्ट्रक्चरल रिफॉर्म्स हुए हैं। ऐसे 10 देशों के नाम लिए हैं। बाकी देश बहुत छोटे हैं, उनमें मेजर बड़े देशों में से केवल हिंदुस्तान का नाम लिया है कि इंडिया इज वन कंट्री विच हैज बीन अंडरटेकिंग स्ट्रक्चरल रिफॉर्म्स दिस ईयर.
Now, Biocon chairman and managing director Kiran Mazumdar-Shaw told Bloomberg Quint that while India's up move is laudable, there is still a lot of stumbling blocks that need to be removed. Listen in.
Property registration is one such area where we are doing very badly. You know, e-governance in land registration is something which we must focus on. Why is it that some states are doing better than others? I know that in many states, you know, registering properties, getting, comfort that there are, that these properties are unencumbered, e-governance can help a lot. And we've done nothing to actually move the needle in that respect. Starting a business, why does it take 30 days to start a business in India, whereas most countries who are in the top 100, it takes less than a week? This is again a very simple opportunity. Again, online, models for starting a business must be adopted. So I think we have a number of opportunities to further improve these rankings.
You got some of the highlights from when Darshan told you about the trade setup today on the commodity space, but Jayesh Khilani is here with all the details. Jayesh, what are the big headlines for you?
Morning, Alex. So I'm watching out for crude oil prices, which have actually extended gains. So Brent is trading above the 61 mark and WTI nearly at that 55 mark. Now, this is on the back of some inventory data that we are expecting API to report. So the crude oil inventory from US is expected to decline as much as 5 million barrels for the last week. And Brent has actually posted, the biggest monthly gain since April 2016. So that's the positive coming in for crude oil prices. Not so much for gold prices, which have actually seen a second monthly drop as far as prices are concerned. Last time I checked, spot gold was trading below the 1270 mark. And also that, this is the second month. October was the second consecutive month where we saw a decline in prices. Now, primary reason for this would have been the surge in the dollar index that we have seen in the recent times. What did really well was some of the base metals on the LME. So nickel actually touched a 2-year high and was up more than 5%, backed by the electric car boom that everyone is anticipating, and nickel is a key ingredient or a key commodity that will be used over there, and hence the optimism. Some of the other metals like zinc did really well, which was up nearly 2% on LME, and we are seeing positive impact of that to rub off on the Shanghai Futures Exchange. Zinc is up nearly 3%. So while copper, aluminium and tin did not do that well, we are seeing some muted cues as far as the Shanghai Futures Exchange are concerned for those metals.
Thanks for that, Jayesh. Now, New India Assurance IPO opens today. The country's largest general insurer is looking to raise nearly 10,000 crore rupees from the primary markets. And that will see the government selling nearly 15% stake in the company. Saloni Dhanuka is here with the key highlights for the insurer. Saloni?
Well, New India Assurance will launch its mega 9,600 crore IPO today. The company will offload close to 12 crore shares in the price band of 770 to 800 apiece in the 3-day offering. Now, the IPO includes an offer for sale by the government of rupees 7,860 crore, while the remaining will be in the form of fresh issue of equity shares, which the company plans to utilize to augment its capital base and maintain solvency margins. Now, as far as the company is concerned, it is the largest general insurance in India in terms of net worth, domestic gross premium income, profit after tax, and as well as the distribution network, as it has the highest number of branches in India as far as March 31st, 2017. Now, talking about the key segments that contribute to its gross domestic premium, a large portion comes from motor insurance, followed by health and then fire insurance. And remember, the company has been a market leader across all these segments, apart from crop insurance in the last 5 years. Now, moving on to key operating parameters, it has the lowest operating expense ratio of 20.4% as compared to its peers, while the claims incurred as a percentage of net premium stood at 12.62%. Okay. In terms of financials, the gross premium book has seen a compounded annual growth rate of 15%, while the investment income and net worth grew at 12% and 7% for the year ended March 17. And in terms of key operating metrics, it has the lowest operating ratio of 20.4% as compared to its peers, while the company has the claims incurred ratio at 92% and the investment yield at 15%. And remember, the company has been yielding more than 15% consistently over the past 5 years. And lastly, the solvency ratio stood over 2.2 times as compared to IRDA mandate of 1.5 times, Alex.
Right. Thanks for that, Saloni, and we'll leave it at that. We'll come back to that over the course of the day, of course. Now, it has been an operationally weak quarter for JSW Steel due to a weak performance by subsidiaries. Nikki Marchandani has looked at the fine print. Nikki, what weighed down on the company in the second quarter?
Alex, you rightly put it, the weaker than expected performance in terms of the subsidiary has, especially the color-coated business, which saw some import pressures coming in, weighed on the EBITDA of the company. This is despite the good performance coming in from the standalone business. Had it not been for standalone business, I think the disappointment had been bigger. But then the silver lining here is the sales volume, which grew as much as 3% YOY. This is mainly, this is despite the production disruption which was seen for yet another quarter in the company. Higher depreciation and lower other income also led to a bottom line miss for the company. What we, the con call highlights, what we heard in from the management, the good part is the company has maintained in its sales as well as production guidance and also the capex guidance for that matter. Sales and production guidance for FY18 have been retained at 15.5 million ton and 16.5 MT for FY18. Now, it also said that the company which was facing the production disruption past few quarters, now that issue has been resolved and the iron ore will now be available at the Vijayanagar plant. But also it said that it expects the coking coal prices to go higher in Q3 at least by $5 to $10 for that matter.
Thanks for that, Nikki. Now, sticking with earnings, Bharti Airtel earnings in the second quarter were in line with expectations. Somit Sarkar is here to tell us what to take away from that set of numbers. Somit?
So Bharti Airtel posted an operational beat in the second quarter. Revenue came in line with analyst estimates, while EBITDA was 5% ahead of the analyst estimates. However, on the net profit side, it was a miss because of an exceptional loss of 179 crores in the second quarter. Now, average revenue per user, that is a key number for a telecom service provider, came in at 145 rupees per customer, a tad below the analyst estimates of 146. On the data usage side, Airtel subscribers have now been showing some good growth. In the second quarter, data usage jumped around 1.6 times to 4 GB per customer per month. However, it is still below Reliance Jio, which posted a number of around 9.6 GB per customer per month. Now, coming to the liquidity position, the net debt to EBITDA of Bharti Airtel in the second quarter stood at 2.91 times, while the net debt rose 4% compared to last quarter to 91,480 crore rupees in the second quarter. Now, this is on the back of higher spectrum payments and higher capital expenditure. Now, sticking to the capital expenditure in the second quarter was at its all-time was at around 7,484 crore rupees, highest in at least 8 years. Now, this is on the back of stepped up investment on data coverage and capacities. Now, in the second quarter, it was the African business which boosted Airtel's consolidated number. Now, African business contributed around 24% to the total revenue of Bharti Airtel, but it formed a majority part when it comes to the bottom line. Now, margin of African business stood at around 32.1%, highest since September 2010, on the back of cost control measures taken up by the company to make its African business profitable.
Right, we'll leave it at that, Somit. Now, again, Hero MotoCorp reported a double-digit sales growth in the quarter gone by, but higher input costs are likely to weigh on margins. Yatin Motor files this report on the expectations for the earnings, which will be out today.
Well, the second quarter for Hero MotoCorp is expected to be muted on the operational front, given the fact that in the second quarter we saw higher steel prices, aluminum prices and commodity cost impacting the overall margins. Now, if you look at the revenue side, we are expecting a 13% growth. Of course, that is largely to do with the fact that we have seen a 10% volume growth for the second quarter. Of course, this means that there will be a 2 to 3% improvement in realizations. However, if you look at the absolute EBITDA, we are only expecting a 5% growth, and profits are also seen at close to 1,035 crores. That will be a growth of 3%. Now, if you look at the margins, as I was mentioning earlier, there will be a decline of nearly 1 percentage points, and margin expected to be close to 16.4%. Of course, the key factors apart from the earnings will be the management commentary on the demand outlook moving forward, especially from the rural markets, which have seen a decent demand growth, especially on the scooter side, and also the management commentary on the raw material cost and the export plan to how to ramp up the export, especially to the South American markets, is something important we'll be watching out for apart from the earnings.
Right. And Shraddha Babla joins in with all the stocks that we have to watch out for today. Shraddha, what are the stocks in the news today?
Well, Alex, to start off with Bharti Infratel, because Bharti Airtel yesterday did say that their board may consider selling controlling stake in its subsidiary Bharti Infratel after it has received interest from various global investors. So keep an eye out for Bharti Airtel. You also have a Times of India report which says that Central Capital has acquired First Rand's microfinance business in India. So yet another counter to keep an eye out for. You have a Mint report which says that Schneider is the top bidder for L&T's electric and automation division, and they may buy it for close to 15,000 crores. So L&T continues with its non-core stake sales. You have a report on Axis Bank. Now remember, this counter rallied about 8% yesterday after reports suggested that Bain Capital was looking to buy about 5% stake in the lender. Today you have a Mint report which says that Singapore Sovereign Wealth Fund GIC and Canada's Pension Plan Investment Board are also in talks along with Bain Capital. All of these three together looking to buy as much as 10% stake. So we could see some reaction there. Cyient, we did see Carlyle sell out its entire 9.9% stake in via bulk deal yesterday. Interesting is the names of the buyers, which includes Reliance and Birla Sun Life mutual funds. Birla Sun Life bought 1.3% stake. Reliance, two funds of Reliance Capital bought 2.5% stake. And when it comes to results which came after market hours, three strong numbers which really stood out. Interglobe Aviation, where revenues grew 27%, but operating margins saw a huge bump up of 600 basis points, and net profit grew almost fourfold. VST Industries, where revenues were just subdued for the quarter, but EBITDA margins came in at a much stronger 31% versus 22%, and net profit jumped about 42%. KPIT Technologies, revenues grew 5.5%. EBITDA grew about 13% with stronger margin growth, and net profit grew about 8.2%. So we could see some reaction there as well, Alex.
Right. Thanks for that, Shraddha. Now, Somit Sarkar is here with all the big brokerage calls of the day. Somit?
So IDFC Securities has initiated coverage on Shankara Building Products. Now they have initiated with outperform rating and a target price of 1,786. Now according to the brokerage, Shankara has successfully evolved into an integrated home improvement retailer, and with implementation of GST, they are expecting acceleration towards organized retail. Now on the back of this, they are saying that Shankara is best positioned to tap the massive $70 billion home improvement market in India. Now they're expecting revenue, EBITDA and net profit of Shankara Building to grow at a compounded annual growth rate of 11%, 17% and 29% over FY17 to FY20 now, and they are expecting the margins to improve by 100 basis points by FY20. The same store sales growth is expected to average around 16% for Shankara Building over FY17 to FY20. Second we have is UBS on Interglobe Aviation. Now, they came out with the numbers yesterday. Now the brokerage has maintained the sell rating and but have hiked the target price to 930 from 850. Now, according to the brokerage, the second quarter was impressive on operational side, supported by compensation credits that the company got. Now, they're expecting the renewed pressure on yields from fourth quarter of financial year 2018, as they're expecting the capacity to grow from then. They have raised their FY18 and FY19 EPS estimates by 24% and 7% given the better year-to-date performance of Interglobe Aviation. Now, they're saying that the GST issues are still outstanding for the company, and the company is adding 8 years on own basis and not on lease basis, and they're saying that the company is going to start the 8-year routes by December 21st.
Right. We'll leave it at that, Somit. Now, that's a wrap on this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.